Hey traders, what's up? Jamie Saettele here. It is 1 p.m. New York time, June 8th, 2016, and this is the midweek strategy webinar for SB Trade Desk. We have a lot to get through, so we're going to start right off the bat with some of the long-term charts that I posted over the weekend with the special report, which you can find obviously in the swing section. So, I've been suspecting something like this was going on, and what I mean by that something going on is, the main question in global markets is the dollar, bull leg. Is it done? What I mean by that is the cycle bull leg from 2008. All right, and this is a very serious, important question consideration. If you think about, the universe, okay, of capital markets, much like the universe that we live in, everything revolves around what? The sun. Okay, in the universe of capital markets, everything does revolve around the US dollar. The dollar is the sun. All right, this is important. If you can get the trend of the dollar, you can basically understand, for the most part, what's going to happen in commodities. Okay, it's an anti-dollar trade. That's gold, silver, copper, oil, soybeans, coffee, rice, anything. Emerging markets. Okay, so the point of this was not to say like go out and just sell the crap out of the dollar. Although, to be quite honest, if you did that, you'd probably actually turn out all right. I mean, I think that we've got a couple years of big downside coming up on the dollar. We've been consolidating, going sideways now since March of 2015. It's a fairly long consolidation. Anyway, the point, some of the points on this chart that I wanted to make are, the slope here is probably the biggest consideration after time. Okay, the time cycles have been really clear in terms of dollar bull and dollar bear trends. Cycles you can see is when I look at the euro chart, but on this chart you can see the the divergences that you've had with the euro. Okay, at most every turn in history. Now the divergences have lagged certainly. Okay, but you know what? This turn right here that we're seeing in 2015, how similar does that look to this turn that we had from 2001 through 2002? Really similar, right? And you have the same dynamic with the euro. Euro made its low here in March of 2015, okay? The dollar poked to a new high in December. The dollar poked to a new high 9 months after the high or the euro low in October of 2000, which would have been the dollar July 2001. Okay, so we do have, the same situation there as far as, the divergence is concerned. And, looking forward, if we break this support, once we do, which we will at some point, your next support for the dollar, I don't think, is probably till at 86. All right, that's a big move. That puts the euro probably near 130. And here's the euro chart. Okay, so I don't have the notes right in front of me, but I think I remember it pretty well. And you've got 15-year intervals between tops. Now, obviously, the euro came into existence like right here, okay? It had been around but not traded. And so before that is a synthetic euro rate. So it'll be mostly Deutsche Mark rates, okay? But it's a synthetic euro rate is what you call it. And what you've got is 15-year intervals between peaks, 1980, 1995, and troughs, 85, 2000, 2015. The outlier is the 2008 high, all right? So 15 years between peaks and troughs, specifically 182 months or so, 182 months from 80 to 95, 188 months from 85 to 2000. You know what the 182nd month from 2000 is actually December, the secondary low, which was the dollar top. 188 months is actually now, June, right now, all right? It's quite possible that the low we saw last week is it. It's not, it should say it's, it's impossible, right? It's quite possible. So the next resistance on this is probably up near 129, 130 on the euro. When we get there, don't know, but the point of this is to basically, this is my fundamental analysis, okay? This is my Van Gogh, okay? I have now ammunition to say that, dollar bearish setups should be traded aggressively, okay? And this is the first time I've been able to say that in many, many years, okay? Many years. It's a very interesting time that we are in history. The market should move very quickly at these turns. So, as we go into seasonal bearish periods for the dollar, and we're in one right now, it's something that you really do have to consider, especially against the euro. All right, so as we get into the near-term charts, of course, think of, I guess, the potential that you could see on the upside for things like the euro and downside on the dollar. Doesn't mean there will be hiccups along the way, of course. In fact, if we take a weekly chart of this, go a little more detailed, does this look similar, 2000 to here, as we talked about with the dollar? What happens when we look at this on a comparison? Okay. Take a comparison chart. Let's overlay it. Try to get as precise as we can in here. Yeah, okay. Not too bad, especially the beginning. So I guess the question is the low that we had here in May, was that it? I'm going to have to go with, based on the long-term analysis and potential, I think it's not just important, I actually think it's prudent to treat it as it is a very big low. So that means that, as we do ease into support at some point over the next couple days to a week or so, you do want to, be want to be aggressive, okay? As far as trading euro on the long side. So that would put us, we'll look at the short-term charts, but if we continue to follow this, we're going to see accelerated euro strength, probably as we get later into summer. All right. So that is the long-term Van Gogh for euro and the dollar index. Now, let's get into the timing stuff, of course. So euro, there's no change here, folks, okay? We are bullish euro, but we're not long euro right now. And I know that Mike talked about the same exact thing this morning, okay? With the the fact that, yeah, there's lots of long-term evidence for euro to go higher, but you don't want to act, bullish from a trading standpoint into resistance. It's just bad trading to do so, okay? Trade breakouts, trade range. If you're in a bull, buy dips. If you're in a bear, sell rallies, but don't get bullish into the top of a range and resistance. And in this instance, we've got resistance from a number of things. As talked about this morning, you've got what, the 618? Yeah, okay, it's at 18. You've got daily or weekly reversal resistance, sorry, at 1402. So, you want to buy basically the slope. And in this case, the slope is probably, it was kind of a shame we didn't get 110.75. Remember, we wanted to buy into there. We are at this median line, though. The reason I'm following this one rather than, say, this one, right, is because you do hit the highs up here when you have this one. Okay, so that's kind of why I'm looking more at this. Eventually, this 50 line could come in as support. it was support, it was resistance. That would put you a little lower than where I want to have an entry. But again, I said I think we have a significant move coming in the not too distant future, and I don't want to be in excuse my language, but I used to say on the trade desk, you don't want to be a dick for a tick. So I'm going to be aggressive, and I'm going to look to buy 1290s rather than say like, okay, I think it can get to 1260, right? Well, if it can get to 1290, maybe it goes to 1260, but if I think it's eventually going up, to 115 and eventually a lot higher than that, then I'm going to say I just want in. I want in at 112.90, okay? Not buying at resistance, but I'm looking to get in a support without, basically being too fine, okay? That's the way I'm looking at Euro. Going a little bit down into 60-minute, you can start to count here, I guess. 1, 2, 1, 2, probably 3, 4, 5, probably a third wave or something. Maybe a little dip of a 4 and a higher in 5, and then maybe you get the bigger pullback. But what you want to do is just keep orders at support, okay? And remember, 112.90 is the NFP level. It's this level right here, okay? That was NFP. It's the hourly close, and as you know, you guys, I like to use the hourly close from NFP is a great reference point. As an example, NFP, this was May NFP that came back and did the same thing as resistance. Okay, it was actually, when did that do it? 5 days later. So perhaps we can come back and test it on Friday. It'd be interesting. But these high volume levels, regardless of whether they're NFPs or not, are quite useful. Sorry, guys. This is on the crappy computer. Anyway, when you have the horizontal level, it's best to get slope there too. But slope here, I'm probably looking at something like this. I was hoping we'd get down there earlier, obviously. Either way, I want 112.90s. The NFP level trumps all else at this point for me. Where else could you see failure? Obviously, the 115 area as well. Okay, 114.95 is daily reversal, resistance to close there. 112.80.90 is also the median line from back here. The bear, there's just a lot of stuff there. Okay, you're going to get a pullback. When it does, you look to be buying this pullback for all the reasons that we've talked about. At the end of the day, this bullish fork could be in play for quite some time. I mean, I'll say it now. All the way up at 130 by October doesn't seem that crazy to me. Up here, okay. Talked about this with a guy yesterday. Here's that 2000, okay, consolidation. It's when markets consolidate like this, okay, the measured move for this target was actually 109.57, which was right here, okay. It took, actually, let me do this on the different 109.57. It took, consolidation-wise, it took, before you broke, let's see. Okay, so the breakout of this was on the 86th week of consolidation back in the 2000-2002 period, okay? you went from 109.57 after the so you got to the target in 34 weeks, and it took 86 weeks to consolidate to get to that move. In other words, a very small percentage of time is needed to reach the breakout level. That's almost always the case. Okay, market will consolidate and build all that energy, and once it goes, it will just keep on going. Okay, let's see where we are weeks wise now. Oops, we are 65 weeks into this consolidation. So a breakout at 86 weeks would put us breaking out basically. Again, I'm not saying it's going to happen exactly like this. I'm just saying that, for reference here, a breakout could be at some point in the fall. It would look like so. Dip, rip, a little more range, and then see you later. Either way, if there's a surprise early, I want to be ready for it. All right, so there's euro. Really not much change from anything that's been written. We want to buy any support, and I still think support is about 112.90 or so. Okay, all right. Dollar Swiss, super interesting. So I've talked about the bullish wedge pattern that developed. Well, guess what? That bullish wedge has failed, and that's actually a signal in the opposite direction, meaning it's super bearish. Okay. At some point, I would think you probably see resistance on this near 97.90 or so, because that was just such big, resistance and everything. Resistance and support before. Old support here, okay, and resistance and resistance. I would expect to see dollar Swiss provide, good trading opportunities up at 97, 80s, 90s at some point. And again, the longer term chart, log chart on this, you look at the log chart to go really long term. Probably one of the bearish charts around at this point, right? We're going back decades, and this could end up being the little bullish wedge that failed here could actually be part of a bearish wedge that's been going on since the low in 2011. In other words, dollar Swiss could end up trading all the way back down to the lows. Sounds crazy, but it's what I see on the chart. Okay, so short-term stuff here. Support probably would come in, if there is any such thing, around 95.40. And again, eventually something up here, but that could take a while. All right, nothing to do here. Again, would be counter trend to go on the long side, in my opinion, but there's nothing wrong with that. If you get signs of a reversal down here at 95.40, it might not be a bad idea. Eventually, consolidation into this Brexit situation. Eventually, will break higher. As you know, I'm following more actually pound yen, which we'll look at later. I'm going to go through the dollar crosses first, and then we'll take a look at the non-dollar crosses. I will tell you, if you're bent on trading pound, watch for support at the 6.6 close, which is 144.36. Okay, I probably wouldn't trade there, but I would maybe trade if the market dumped into 143, just because that's the trend line off these lows. We do have that the next low is due on 621. So the best thing that could happen as far as the as far as the cable is concerned for setting up in a trade into Brexit would be if it kind of traded higher, sold off into 621, the cycle low date, and then you would have an opportunity to really get bullish and to support whatever that may be. But that's in a couple of weeks, so wouldn't think too hard about that right now. Again, pound yen's a better look at this point, and we'll look at that a little bit later. Dollar yen. Let's go through the, that where we are, we're at a big spot. I actually want to look at, so that we have an interesting dynamic with dollar yen. Actually, let's look at the monthly chart. We have an interesting dynamic with dollar yen and the long-term picture here. There's so much stuff here, and you had a monthly, talked about this last week, but you had a monthly reversal. J Spike has come right back, obviously, in the first, 6 or so trading days of this month. I'm of the mind that we probably go sideways for a bit and then try to break down again, but that would be far off. Levels that we're looking at here, if we do slip to a new low, are probably about 103.72, which is the high from 531.13. That's May 2015. But I think we actually hold up here, and here's why. So 200-week average, and some people would say that's a silly average to look at, but you know what? Evidence is evidence, and it's silly to pretend it's not there. So here's the 200-week average. Okay, it's actually still quite bullish as far as its upward slope is concerned, meaning that on its test, your expectation is that it holds. Okay. Big topping processes in dollar yen. So like if we go back to say, hell, you can go all the way back here. You can go back to 1982. Okay. What happened on the 200-week average? It did hold on its first big, attempts, right? First several. The next big topping process was all the way back here, 1998, in the Asian financial crisis. Came down, and much similar to what we've had happening actually right here is that it didn't quite reach it, right? And you can see that you had these sell-offs into it, rally, sell-off into it, and it kept holding. All right. So I'm kind of thinking that we're something around here, right? False breaks back in 2001. This is different though because it's relatively flat, even negative sloping. So to me, the more similar analog would be when you have the upward sloping average, which is more like 99 and even in 1882. And then that brings us to now. So that's the long-term picture with the moving average, which I think is a nice piece of information. And let's look at the crash indicator, right? So okay, so this is the crash indicator. It's really simple stuff. The way that I look at these things, noticed over time that you don't get the market going to S3 that often, right? Okay, fine. But when it goes there, a number of days in a row, you tend to get exhaustion of that underlying move. So what the indicator does is it plots a rolling 3-day number line where, if you hit S3, you have -3. that day. Let's say the next day you hit S2, so you'd have -5 that day, and the next day, let's say you hit -2 again, you'd have -7 that day, okay? Because it's the last 3 days. So that's all it does. It tallies the last 3 days and the pivot value that you've hit. So when you get to 7, it's considered pretty extreme because it doesn't happen that often. I've only seen 9 once in the history of any market, and that was actually the Dow Jones in August 2015. 8 obviously doesn't happen too often either. Anyway, so we had -7 happen here. -7 happened over the weekend. We have stabilized. It's important that we kind of start to turn up, otherwise this risks going into full, crash mode. But to set, since the top in 2015, we've had a number of these episodes, obviously including 2 back-to-back here in August, 2 within 3 days in April of 2016 before we got a big low and retraced most of everything there. And then before that, we've got to go all the way back to periods into 2009, 2010. So you can see one we had here that was a big time low in November of 2009. Decent low in April of 2009. This was the financial crisis peak, 2008, October 24th. This one would not have worked at all. That was February of 2008. And if you remember, February of 2008, I actually believe that was a leap year. But in any case, that happened, and you never got any sort of really traction, right? It just kind of continued lower. And then you actually had one here in February of 2007. So as you can see, it doesn't happen too often, and most of the time they do end up identifying pretty important lows, right? I mean, you got to go all the way back to 2002 or 2003 to see one. That was after a gap. Go back further on the scale. And the Asian financial crisis, October 98. And after that, really don't have a whole lot. I mean, it just does not happen very often, right? So, yeah, there's the crash indicator, and that's all it is. You take the pivots, add them up for the last 3 days with, assigning values 1 through, +3 to -3 for R3 down to S3, and then you add up the last 3 values, and that gets you your number line. This is what it would look like in graphical. Let's see if I have it. Yeah, so you can see it like, you get to -7, right? Like it's pretty much the most you go is 7. Actually, this one in 2009, you did go to, that one went to 8, -8. So anyway, I run those numbers every day, and when something pops up, I do write about it. It's very rare. They just don't happen that often. So that's the count system, if you will, that I look at. So after all that, the point of all this gibberish that I'm telling you is that the 200-week average, the the count that I just presented basically tell me that there's risk of kind of mean reversion in dollar yen at this point. Okay, that's what I'm looking at. Okay, we'll go to Aussie. Rallied off of quite significant support, obviously, and we're getting into the first area of resistance, which is the 74, 90, 75 region. Former lows and 50% retracement. Aussie's actually one that I'm not sure if the major low is in place or not. Just because the euro low is in and the and the dollar index high is in, doesn't mean the Aussie has to be made its low yet. Reason being is that the Aussie is not even part of the dollar index. Dollar index, the ICE dollar index, actually has the Australian dollar. The euro is 57%, and then you've got Japanese yen, British pound, dollar SEK, and dollar CAD, which I think is 8%. So the only commodity currency in there is the Canadian dollar. But with this market, your minor resistance, basically, 75 region. I would not fade any strength in this until there was 77 at least, and that would be weekly reversal level. And I still want to buy it. We might finally start to get a pullback from here. You can see we've kind of come up here, pause a little bit, see what the near-term momentum looks like. Nothing on the divergent front. The momentum itself, though, as I wrote yesterday, see how strong this is, right? This RSI in the 240 minute. It's a lot like it was back here, right? You have this extended period of just pretty overbought, elevated, RSI momentum. What that tells you is that it's probably the beginning, not the end of a move. Beginning or middle of a move, right? Not the end of it. So in this case, it's okay to basically look to buy support, which means leave orders at support. And I think that this blue line is basically the channel, right? Former channel. I do think that this is where you want to buy it. Former support, allow it to become, or former resistance, allow it to become support. And it's very similar to what happened during the last good momentum period that we had, right? So you remember this, if we go back to this trend line, okay, that was pretty clean. Same thing happened, right? The old channel level ended up becoming support. And this was only off of one level. Didn't even cross two levels. At least now we cross a couple levels. So use this. Okay. Use this whenever we get there. At this point, it's probably not going to be 73.80s. It's probably going to be more like 74. Okay. So right up in there. See how far you can take it. Again, 75 might cause some issues because of the former lows. Congestion here. I believe this was the rate cut back here, so might be some trading around there too. 75.70 is the 618. But yeah, any sort of pullback into this is a buy. All right, it's kind of the same as the euro in that you're looking for a pullback and then higher. Again, you might say, like, if you're looking for a pullback and you're at 74.70, why wouldn't you go short for? Well, that's too risky a situation. The momentum is strong on the upside, and you want to make life easy on yourself. Okay, look to identify the trend. In this case, I think the trend is higher based on lots of reasons, including but not limited to the level that we bottomed at, the momentum short term, the fact that you've made this channel, broken through it, and then you'd like to look for support to buy in a low risk environment. So that is Aussie in a nutshell. Kiwi, obviously a little more difficult to talk about at this exact moment because RB and Z's later. This is what I'm looking at in Kiwi. It's the same thing really that Mike is looking at. I put out that chart this morning on Twitter. I think we were probably, mature enough here for a pullback, but RB and Z, obviously many different things could happen. Big picture, I don't know, maybe I'm just stubborn, but big picture, I do think that there is still potential for a downside surprise or whatever, a shock, whatever you want to call it, in Kiwi dollar. And let's go over that real quickly. So chart, this was put up not too long ago. The August, the 98 99 situation, pretty similar to the August 2015, May 2016 situation. In this case, obviously, with the way we've turned up, seems pretty much impossible that the Kiwi's going to end up staying below these highs. But watch out for the area above 71. Okay, it is the long-term median line. And some very precise touches as far as support is concerned. Also some not so precise touches, but still some action around there. And, if we were to get up there and find some sort of resistance, it would be possible that you end up having a wedge of sorts, okay, from here. Now, RB and Z today, so the timing on this, we're really close. We're like 100 pips away. This might be ruined by today. I don't know. RB and Z, I don't know what they're going to do. To me, going into this, the potential is on the downside, actually, because Kiwi's been bid up so much in a short amount of time. And you do have, not really anyone expecting them to do anything as far as a rate cut, but the New Zealand, the authorities over there, the RBNZ, they have made it, they're not shy about talking down their currency, and they're not shy about even intervening in it. They've done it before, so perhaps there is something for a surprise. Maybe there's ammo for a surprise. I don't know, but if there's going to be a top, it's going to be around 71. Problem with me again, the timing situation. Seasonals for Kiwi, you do get a top after this week, but it's short term. The bigger tops for Kiwi end up coming really not until you get into July. Okay, and obviously that's, middle July is a month off. So, you can see here, this is the frequency chart, and August is typically a crappy month for Kiwi. And we're just not there. So maybe there's something for a short-term short. I'm not going to go into RB and Z with, suggesting that you just pulled short and pray. Probably not the best idea in the world, but we are brushing up against very steep uptrend resistance here, and it would only be natural for the market to react and head lower from here. If there's going to be a short position, it's something that would need to take several days to materialize. You'd probably have to come off here, break some support, and then go back and retest it from the other side, and then you could get something like, something for a short position. But, nothing. This is pure speculative, just talking right now. Nothing to do here as far as I'm concerned for Kiwi. Dollar CAD. So we're kind of back at the level I was hoping would hold. And as you know, we're looking at crude oil. We talked last night, or didn't talk last night, but looked at last night the divergence that you do have on crude and CAD. So this says CAD dollar, not dollar CAD, because this is the futures chart, and it is CAD against dollar and not dollar CAD. So you're looking at them together, and yes, over time they do follow each other very well. They have for a very long time. When you start to hear people say, oh, the correlation has broken down, don't, blah, 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 just call BS on that, because every time it breaks down, it starts to come back to, in together, right? So, as I wrote last night, that's the most valuable time to look at this so-called correlation or relationship is when they are not moving together. In other words, when one market's at a new high and the other one's not. So as long as dollar CAD is above the lows that we made, okay, down here, you actually have this divergence in place and the opportunity to buy the dollar CAD. All right. My thing is, obviously, I want evidence of some sort of a turn. Okay, today we're getting a little bit of a pickup. I don't know if this is the turn. Okay, there's a big confluence. This is the long-term support line, and that's not until Friday, which is CAD jobs. So who knows? Maybe there ends up being exhaustion into CAD jobs on Friday for the Friday low at 25, 10, 15 or something. I don't know. Near term, the stuff that I would follow is just this simple pitchfork that you've got going on here. 4-hour chart. Okay, I'd follow this. 5-minute chart. Seeing, I guess, some promise, the fact that it stopped going down, but, it would have been better to hold this, obviously, rather than breaking through it and coming back. I don't know. We'll see. It would be nice if we could get, something like a J spike today. So if dollar CAD closes positive on the day, then I'd probably end up putting in an entry overnight in the swing report. But at this point, we are still down on the day slightly. So stay tuned. When we get into the crosses here, you'll see too, Euro CAD actually is setting up for some sort of a big move, potentially higher. But quickly back to this crude oil CAD deal, right? Okay. Here's a weekly chart. All right, so you're going to tell me that this correlation that's gone on forever is all of a sudden breaking down? I don't think so, right? Remember back if you were trading back in 2008, CAD dollar made its high a year before oil. That's why when oil was doing this, we were like, this is a complete blowout, because it wasn't fundamental. But what I mean by that is that the Canadian dollar was not with it, right? Something was wrong. Same thing in the financial crisis. Crude oil made its low before the Canadian dollar did. You can even look at turns over here, right? Okay, the crude oil price topped in 2011. Canadian dollar went back to another high, and then it topped. Okay, you see divergences at virtually every turn. Not every turn, but virtually every turn. Okay, even back here. Bottom, CAD first, then crude. Top, crude first, then CAD. Okay. And now and obviously when back here in February, we had first we had the bottom in CAD. A month later, we had it in crude. Well, here we are now. Crude's at a new high. Canadian dollar is not. All right. Doesn't mean that crude's going to crash tomorrow, but it does mean that I'm treating this move higher in CAD or in crude oil right now as a false kind of fake out before everyone gets screwed. All right, and look, we do have, here's the 4-hour chart, crude oil at resistance. Of course, I've thought we were at resistance for a while. Haven't traded it, but And that's another thing too, right? Just because you've come into resistance doesn't mean you just go, buck wild and start shorting the crap out of it. It's better, obviously, to get some sort of a response on the market, right? So here I thought we had a behavior change, right? Remember, old support became resistance, turned down. I was like, this looks nice. Okay, great. Well, one more push. Okay, so hopefully it holds here. What you want to see then is the market come in, break some support, come in, behavior change, test it as resistance, and then take it lower. Okay, I think we get back to 42 bucks or 37 bucks. I do think that the long term, the crude oil low is in. That's it, 26 bucks. Okay, but are you going to turn bullish up here after 100% rally? I don't think so. Look for it to come back to $37 to $42 over the next number of weeks, maybe months, maybe longer. I don't know, but some consolidation is needed in order to reset this thing for the move higher. What about Brent UK Oil? Same thing. In fact, you've got two equal legs in Brent at 52.68. What's the high right now? 52.51. So pretty close, right? And then, of course, finally, we do have the all-important media. So oil is now the ultimate momentum trade. I was writing my swing update yesterday, putting the finishing touches on it, and I was already writing about crude oil when all of a sudden this, the show Fast Money on CNBC pops up, and then this headline pops up, and they start talking about crude oil. And I said, holy crap. And it was actually on mute because I can't stand listening to it. But it was on mute, and then Gartman gets on, and it's like, oh my, you got to be kidding me. So, yeah, we have this resistance up here and everything, and there's more. I mean, COT, okay. Do I have Oh, I don't have it open. Let me open that. Open the commitment of traders data. There is a huge amount of longs on the COT. So, let's see here. Here we go. All right. So, basically, you've got the speculators, the longest, well, since back here in July of 2014. It's a big long position, okay? It's that simple. So, long position is back not that far from a record, believe it or not. And yet we are so far below the record, which, the record was when crude was at almost 120 bucks. So, the funny thing is with this is that, and we had talked about this back years ago, but during this whole period of sideways prices for crude longs went like in their own bull trend when crude went sideways. That would tell me the crude was going to crash. Okay, and it did. Think the low's in now, but the positioning suggests it can't really go that much higher. Kind of everyone made friends with crude really quickly again. So just a heads up there. So lots of evidence to warn that crude's going to come off more or less now. But again, not here to pick the top, but I'm not buying crude. I think it turns down, and any sort of turn down will be analyzed to see if there's a position to take, and dollar CAD in the FX world would be the way to do it. So maybe it's 2550, 2500 on Friday. I don't know. All right, what about crosses? There's some interesting crosses going on. Euro CAD, Euro Kiwi, obviously we've looked at both of those. Euro CAD actually, so with dollar CAD and Euro dollar, like them both kind of on the long side. Check this out. You've got this 5 waves down, right? On Euro CAD, 1, 2, 3, 4, 5. A, B. Can I get a C wave? Back up to 150, right? So this is starting to look really interesting. Euro CAD is for a long position. Levels to pay attention to for support. You've already retraced 61.8. So, and you're getting a little key reversal today. I don't know if today's a low, but 43.65 is weekly reversal support. That's a level to pay attention to. See what it looks like heading into the lows. See what the momentum looks like. Hold on while this downloads some data. All right. So divergence. You might be able to get one more slip to a low, which actually would fit pretty well, wouldn't it, with the analysis for euro dollar. 43.65, I said, was the daily or weekly reversal support. It's also some general, consolidation area, high-low stuff here. What's that? 43.74. So yeah, this would be one to pay attention to. Euro CAD on the long side. Yeah, either way, it's lining up well. I mean, you've got kind of a head and shoulders going on here. Prefer to see the higher neckline. You do have choppy drop, and you do have an impulsive advance. So, I mean, you're kind of meeting lots of criteria for a bigger rally. ABCX, ABC, 43.36 is 2 equal legs. So maybe that's the sweet spot. So yeah, I would say at this point, and I'll write it down more and put it in the updates, of course, but it does look like 143.36/65 is the sweet spot for a Euro CAD long position, doesn't it? Euro Kiwi, again, with the caveat here that you're at support. Is this going to maybe try to break down on RB and Z and trick everybody, or is it really going to break down? I don't know. 200-week average. Again, I don't know what the hell 200 weeks is, right? It seems like a total arbitrary number to me. But again, I'm not going to act too smart. 200 weeks, it was pretty clear resistance, was it not? Like very precise in its resistance for years. And then we broke through it, and it's been support. I mean, it was support, January, it was support. You did close below it in January and then had like the biggest rally ever, and as the world fell apart. Seems to happen every 6 or so months these days. In December, I don't know, we get there again, perhaps, who knows. Pay attention to this level. I would, with RB and Z coming up today, pay attention to the level of weekly reversal of 61.17, okay? 161.17. Okay, right there. Right there, right? So we'll see. You do have this, again, this triangle situation. You're at it now. The year open is right here. If this breaks down, be careful on new. You cannot chase on a breakdown on RBNZ. It's 1 o'clock. It's more for one. It's at the rollover, and you do tend to get all kinds of crazy liquidity issues at that point, and their RBNZ is prone to reversals and stuff all over them. Just be careful. So, my thing heading into this is that I'd look for, if we do break down, I'm going to act like it's a fake out until it closes down here. If there's a close, then great. Just be aware. Euro Aussie, actually interesting slope to watch for. So if you just draw a trend line from these highs and your associated parallels from this thing that goes all the way back to the high from 2014, man, you nail it on the head with a whole bunch of inflection points, including a low in April. Median line from that as well hits all kinds of stuff, including the high here, breakout level here, bullish slope here. I don't know, maybe Euro tries to bottom around the 17th or something of June, because that's where the intersection is. Where would the 618 on this be? Way down here near the Euro Open. 50% then is 50.39 though, so that's cool. That's what I'd be looking for. Currently trading 52.60, so hell, if maybe there's an opportunity to sell this, but that'd be the same as long Aussie. We want to buy Aussie anyway at 74. So Aussie pulls back into 74, you probably get a pop up here into 53.80, and then this thing rolls over. All right. So, pick your poison. I'd rather trade Aussie dollar than Euro Aussie, because I think Euro's going to go higher at some point anyway. But if you're bent on trading Euro Aussie, then let's see. Hold on, and download the data again. I had to restart my computer earlier, and all the data came out or got deleted, so I have to download it. All right, hold on here. Well, it should come up soon, but if it doesn't, 53.80 is the spot. It looks like for resistance with your support down. Screw this, I'm not waiting. With your support down here at 50.40. All right, the reason I wanted to go 240-minute chart is I just wanted to see if there was anything fun to look at here. Let's see if trading view, we can do it there. Let's check this out, trading view. All right, here we go. Let's try this. So you do have this solid fork here to follow, right? Okay, and then making a channel. Maybe we ease our way down into support down here near 50.35, which actually intersects the level we'd be looking for anyway. And nothing really that great to look at here. I'd follow that though. 50.80 resistance perhaps. Support down here, 50.40. Trade them through Aussie dollar and Euro dollar separately. Unless you get down here at some point, that would be a buy in its own right. But that's where we're looking, is Euro Aussie. So what I like about that is it kind of fits both deals. Okay, pound yen. This was last night, posted this. So was wondering what pound yen is doing. The fake head and shoulders, okay, what we have here is the fake head and shoulders. It doesn't mean that we're going into oblivion just yet, although that's certainly a distinct possibility. My thinking, my bias, if you will, is that this is a triangle, and you know, some might say, Jamie, this is no triangle. You've got, look at this as a new low low. Well, in Elliott, oftentimes you have what are called running triangles, okay? And that means that the B wave is often below the origin of A. And a triangle pattern, or a corrective pattern, would actually explain the three wave movements that you have going on from the high here, right? Three waves down. I mean, it's clear as day. That's a three wave move. That's a three wave move, the C wave, clear as day. All right. So C wave three up, B wave three down. Oftentimes you'll have alternating legs in a triangle that do relate by 618. All right. Well, interestingly enough, we have that relationship if that were to play out at 160.50, which is real close to the month open of 160.19, which is even closer to daily reversal resistance of 160.36. In other words, 160.19 to 160.50 is your sweet spot for resistance. Okay. So if we're going to get there, where are we going to get there from? Well, the week open is where I'd watch, right? So 154.08. I did write last night to pay attention to the 618, which is 154.83, and we're not quite there, right? But this being pound yen, kind of give it room to stretch, right? And there has been a tendency the last few nights, if you've been watching the markets closely, for the Nikkei to kind of sell off early and then bottom in the second half of the Asian session and turn around. So maybe you see something like that tonight. I don't know. My point, what I'm trying to say is watch 54.08 closely, have it marked down. That might be your secondary low within what could be the final E wave in a triangle back to 160.50. Quickly here, let's look, because we're running short on time, but you might get your final low somewhere on this line. If you want to go bigger picture, there are some really big levels around 147. All right. It's obviously quite a ways away. It's 800 pips from, where we are right now. But if you, have been around pound yen, you know that it can move 800 pips in short order. 148.20 is actually the 2000 low, and the 618 retracement of the entire rally from the low in 2011 is 147.11. That's a big spot. All right. We've already retraced half of it, but this is a big area down here. So, again, what I do with levels like this is I have them written down on my wall, or a chalkboard or a piece of paper or something. Just keep them in front of you. That way you won't be surprised when the market gets there and you can act on it. Finally, Aussie CAD. One we have not looked at in a really long time because I had no reason to. But when I look at this chart now, I am wondering if perhaps you have a giant inverse bottoming pattern. Head and shoulder has been going on for several years. One thing's for sure, you have been going sideways since 2013. Okay, up leg, down leg, up leg, down leg. Typically, these things go in waves of 5, and right now there's 4 of them. So you have A, B, C, D. Wave E would send you up this way. And what you do have now is something to work with on a short-term chart. You have slope, and it's pretty clean. Okay? So that's why I pay attention to this Aussie CAD picture, 4-hour chart. Again, something I haven't looked at in a long time just because there's been no reason to, but with Aussie CAD trading down into what appears to be longer term range support within a very, very long term multi-year triangle, there's potential for a move up to 98 here, and you're currently trading 95. So I would watch for support on Aussie CAD at this lower parallel. You have 5 waves up, clean as day. 1, 2, 3, 4, 5, A, B, one more drop lower, C, take it higher. All right. So that also confirms kind of what we're seeing with Aussie being, obviously quite firm, and maybe even looking for this crude oil top dollar CAD rollover type of deal. Would be kind of bullish gold, bearish crude oil if you want to get macro about it. All right. Okay, so I'm going to wrap it up there. Um, it has been a little over an hour. I'm not sure if I have time for any questions, but I will see. Kelly says, before you, can I take a picture of your Kiwi chart? Thanks, Kelly. Yeah, sure. Are you talking about which one, Kelly? Are you talking about the long-term one or the short-term one? The the short-term one. Yeah, sure. Okay, here we go. So let me clean it up for you. You want this. Adam, what time do you update the swing update? Well, it depends, but they're usually updated uh, towards the close of New York into early Asia. So anywhere from, anywhere from like I'd say 6 o'clock to 8 o'clock p.m. Eastern time, typically around the earlier part, like 6 o'clock. Anyway, Kelly, this is the chart. Just draw the fork here. You have some parallels within there. And Masanori actually has a question quickly on the FTSE. The FTSE to me is actually, you can call this the Van Gogh of stock indices in the world for the next several years. And here's why. This is a triangle. A, B, C, D. Last leg lower E is going to take us into the final low for world stock indices, and this thing goes higher, right? The U.S. index looks nothing like this. But that's what we're looking at as far as the big picture. Now, in the short-term picture, it's kind of a mess, as one would expect. Three waves lower, probably going to go three waves higher. Okay, would be my guess. I don't know if this low holds or if we're going to go lower before we go higher. And simple trading language, Masanori, this chart is kind of a dumpster fire, to be honest with you. If I were to trade this, well, one, I wouldn't trade it here, but if I were to develop a plan to trade this, I'd view it within the longer term context that I think we go lower before we have significant upside potential, which means I'd be looking for resistance. $618 doesn't seem high enough. Nothing, there's really honestly nothing here to look at as far as I'm concerned. Bigger picture, I think it's an E wave from here. Okay, A, B, C, D. Wave E takes you down here somewhere. This could take a long time, but then it's higher. So I guess, again, look higher. Maybe this happens. Maybe you start to come off once the S&P gets 2,200, and maybe that puts the FTSE up here somewhere, right? That in itself tells you something. FTSE, no new highs, nowhere near highs, and the S&P is at 2,200, or pushing towards 2,200, I should say. It's not at 2,200, but it'll get there. Hossein says, my Twitter's not working. Could you help me with it later, please? Thanks. Yeah, Hossein, send an email to info@SB Trade Desk just with kind of, what, like why it's not working, I guess. It won't allow me to open it as a member. Okay. I'm not quite sure. I know that you are on it. Like yeah, like we've looked. We just looked actually, and I know that you're on it. Like you're a follower, so it's not like you got taken off or something. So I'm not quite sure, but would love to do everything we can. So if you want to send an email, with maybe some screenshots, maybe that'll help. Okay, all right. Okay, great. All right, super. All right, great, everyone. Thank you for attending. I'm going to get this wrapped up and get it archived so that I can put it on the website for you to watch later if you're late or just want to review it. We went through a lot of stuff today, dollar majors, long-term charts in the beginning with dollar and euro and Y. I think we just saw a multi-decade turn, all that good stuff, and then the crosses towards the end. All right. Okay. All right. So take care. Have a great rest of your week. Bye bye.